All right, the second problem deals with petty cash. And looking at the handout, we'll see that you establish a petty cash fund for $200 on October 1st, 2006. What a petty cash fund is, it's an amount of money that you have set aside. You write a check out on your regular checking account. You go down to the bank and you get the money. In this case, get $200. And you give it to somebody who is going to be the petty cashier. They're responsible for that money. And anytime that somebody needs a small expenditure and there's no one around to authorize the writing of a check, the petty cashier will give the individual a small amount of money and they will buy whatever they need and they will give the petty cashier a receipt. So at any point in time, if you did an audit of the petty cash fund, you would find out that the receipts, the total of the receipts plus the cash, would equal the total amount of the fund. In our case, that would be $200. So, in this particular problem, we start on October 1st. We debit a new account, an asset account, petty cash for $200. And we credit cash because we have gone down to the bank and we've taken $200 out of our checking account. We give this money to the petty cashier and people will come to them and need it for business purposes. Our particular example here says that the petty cashier used $28 to buy office supplies. On the 13th, they used $56 to pay for some freight. It was FOB shipping point. So we bought some inventory and we needed to pay the freight. On the 18th, we needed to get some stamps. So there's $39 of stamps were purchased. On the 24th, there was $50 for equipment repair. Well, if you take the 28, the 56, the 39, and the 50 and add them up, you will find out that that adds up to $173. We started out with $200. So if we have $173 of receipts, we would expect to have $27 of cash. The problem goes on, and we see here, the petty cash fund is reimbursed on the 25th when there's only $26 of cash. There should be $27. What has happened? We're short $1. But we need to make a journal entry. The journal entry we make is on the 25th of October. Some of you might say, why isn't there a journal entry on the 10th, or on the 13th, or on the 18th, or the 24th, the date when the petty cash was spent? There are no journal entries on the date that the money is spent. The journal entry for petty cash is dated the date the fund is replenished. Because what we're going to do is we're going to go and we're going to write a check out for however much we need to get that fund back up to $200. Now, the fund only has $26 of cash. We want it to have $200, so the check has to be for $174. That's the credit to cash. We will book out all of the expenses. Office supplies, $28. Inventory, $56. Now, why inventory $56? Because we had to pay for freight in on the inventory. That's not a delivery expense. We know from Chapter 6 the delivery expense is when we sell goods and pay for the freight going out. Here, the inventory was coming in, and we had to pay the freight. Therefore, that's an added cost of inventory. There was some postage expense of $39, some repair expense of $50, and we were $1 short. Should have been $27, there were only $26. So we debit this account, cash over and cash short, for $1. Here is the journal entry to replenish that fund. What I need you to know in petty cash is there are only 3 times when you will have a debit or credit to petty cash. The first time is when you establish the fund, we will have a debit to petty cash. If we were to increase the fund, this is not an increase in the fund, this is a reimbursement of the fund. If we increase the fund, we would have another debit to petty cash. If we decrease the fund, there would be a credit to petty cash. There is never a debit nor a credit to petty cash when you reimburse the fund. Note here, we are reimbursing the fund. There is neither a debit nor a credit to petty cash. What there is, when you replenish the fund, is a credit to cash, because you're taking the money out of your checking account and you're giving that money to the petty cashier. You're not increasing the fund, you're just getting it back up to its $200 balance. So, you need to know how to account for petty cash. Petty cash is a system to control cash. The alternative to a petty cash is to give the petty cashier the right to write checks anytime. That is a recipe for disaster. Only certain parties should have access to the checking account. Many small business people, unfortunately, don't follow that rule, and they entrust an employee to make disbursements and write checks, and oftentimes what happens is the party writes checks to themselves or to unauthorized expenditures, and the company is defrauded. So, never ever give employees, other than certain responsible people, never give the bookkeeper the right to write checks and sign them. That should be left to the owner or to other higher people in the organization.